His latest and much awaited weekly newsletter, Greed and Fear, Christopher Wood of Jefferies speaks about two very important points. Number one, he speaks about the US presidential elections, his thoughts on that, and how COVID-19 is actually impacting the turn or the race as far as the US presidential elections is concerned. Number two, what he actually talks about is he speaks about the sharp fall witnessed in the equity markets in the last week or last fortnight, and again he shares his thoughts on developments and what exactly should investors do in this particular sharp fall that we've seen. So number one, what he is saying is that as far as Greed and Fear's base case is concerned, he continues to believe that COVID-19 is actually in the process of burning itself out. However, what he is saying is that the number in the rise, or the rise in the number of cases as far as COVID is concerned is USA, is something that is benefiting Joe Biden, and this again he believes is to the benefit of the Democratic candidate. However, what he continues to believe and what Greed and Fear's base case continues to remain is that what actually matters is what is happening on deaths, the death rate, and not the number of active cases or not the number of cases that continue to increase. He in fact speaks quite in depth about Europe. He speaks quite particularly about countries, how their response has been. He's been quite critical of, a lot of countries as far as Europe is concerned. However, he believes that worldwide the country that's actually got it right in terms of its response to COVID is actually Sweden. However, once he's talking about equity markets, he also talks about commodities to a certain extent. In terms of the equity markets, what Chris Wood believes is that any market setback that is actually being witnessed on back of the concerns of a second wave emerging. Now remember, markets are falling given the fact that number one, you're seeing a second wave or the rise in the number of active cases, thereby leading to market participants believe that there could be renewed shutdowns or renewed lockdowns across the globe. However, he believes that this particular fall or this particular dip could be and should be seen as an opportunity to actually add to cyclical exposure as far as stocks are concerned. He believes there are two key reasons for that. Number one, he believes that the world is much nearer or much closer to the end of the pandemic rather than the beginning. And number two, what he believes is that fears of any renewed downturn in terms of economic activity will actually lead the Fed as well as the US Congress to consider and to quickly come up with further monetary as well as fiscal stimulus measures. He's also talking about both gold as well as silver in his commodities write-up, and what he is saying is that both gold and silver after a sharp run-up are actually in a bit of a correction mode, with silver proving to be much more high beta compared to gold. However, what he is saying is that again, any kind of sharp correction or sharp risk of rally will actually be bet by the Fed's more accommodative monetary as well as fiscal policy.